Hi, everyone. Welcome to everyone around the world. Good morning, good afternoon, good evening. Thank you for attending this special event. My name is Rebecca Lammers. I'm the Democrats Abroad Global Chair of the Taxation Task Force. I live in London and I vote in Ohio. And this is a Democrats Abroad hosted webinar for today. And I'm just going to go through some basic information. I need to read this disclaimer before we get started. Democrats Abroad cannot provide individual tax advice. Advice requires consideration of your individual circumstances and needs, none of which can be done at this event. We are not tax lawyers, accountants, or advisors. Please consult a professional tax advisor, accountant, return preparer when addressing your personal tax matters. Democrats Abroad does not endorse or recommend companies or individuals attending or hosting the event. The views expressed at the event are those of the respective individuals and companies, not Democrats Abroad. No liability is accepted by Democrats Abroad for the opinions expressed or for any errors or admissions expressed about matters of tax in any country, your financial planning, or your legal obligations. If you are in need of tax advice, you can consult the American Citizens Abroad Tax Return Preparer Directory to find an advisor or tax return preparer near you, or providing online services to meet your needs and budget. The buyer always need beware. So with that, just a few other reminders before we get into the main presentation. A lot of you have generously donated $10 or $5, and a lot of the support for hosting these kinds of webinars, as well as the really important work that Democrats Abroad does to get out the vote and register people to vote so that we can elect Democrats back in the United States, is super key and important. So if you haven't donated yet, please do consider giving a donation of $10 for general or $5 discount for student, unemployed, or retired. Or if you're watching this afterwards, please consider giving a $5 donation for the recording. So we've gone through the introductions and housekeeping. I'm now going to go into the main presentation, and then we'll do the Q&A at the end. Just a reminder that we will not be taking questions in the chat box. What we will be doing to streamline the Q&A is we'll be sharing a link towards the end, and you will be able to submit your questions at that point in time. So we will try our best to get through as many questions as possible then. So a little bit about me. Why am I hosting this webinar? Well, I have student loans. I have federal student loans myself. And so I have been following this personally for, since it all began, depending on where you consider it's begun. But I am now, I guess, 16 years into repaying my student loans. I'm personally impacted and was very excited about the potential of having some of my student loan debt relief applied for my student loans. I'm a volunteer for Democrats Abroad. I'm the chair of the Taxation Task Force on our tax advocacy work, but given that there's a financial implication for this as well, I hosted a similar webinar like this last year. Some of you may have attended that one as well. And so this is kind of a continuation of, or an update, given the recent information about the Supreme Court, which we'll get into, and all of that. There has been a lot of very confusing information out there about what's going on with both federal student loan debt relief, as well as what happened with the Supreme Court ruling and all of that. So I'm going to go into that into a little bit of detail, and we'll be more talking about what are the options at this point and what do you need to do now. So just as a kind of summary, starting on March 13th, there was a March 13th, 2020, pandemic hit. So what happened was Biden put a pause on federal student loan payments. So that meant that there were no payments due. There was zero interest has accrued since that date to today even. So most people have not made any payments for over 3 years now. Between 2020 and 2022, there were various different types of incremental relief that the Biden-Harris administration was working on applying, given that people were financially suffering from the pandemic. People suffered in a whole different range of different reasons, but a lot of it was people lost jobs, people couldn't go to work because they weren't able to because of the pandemic. And so basically what the administration did was they looked at providing incremental relief based on current laws. So some of that relief included $13 billion for 1 million borrowers for discharged from borrower defense and school closures. So that was if you went to a school that closed, then you were eligible for relief in that circumstance. There was also $9.6 billion for 175,000 borrowers through the Public Service Loan Forgiveness Program. So basically, if you work for the government or in any kind of like public service job, like as a teacher, then you were eligible for relief after 10 years. There were a lot of teething problems with that program, and so they fixed it, and they were able to provide that relief for people who were eligible. Additionally, there was $9 billion for 425,000 borrowers in total in permanent disability charges. So it meant that if you were permanently disabled and you weren't able to work, you weren't able to make payments, and for a long time, those unmade payments were disqualifying you from making payment, from being eligible for paying down your debt or for qualifying periods. And basically it changed it so that that period of time that you weren't able to work, that it became a qualifying period in order to help discharge some of the debt. So there was, these were kind of like incremental relief options. And then in August last year, we, Biden-Harris administration then passed a huge change, which was if you had a Pell Grant, you could receive up to $20,000 in debt relief. And if you didn't receive a Pell Grant and you had any kind of, basically any other kind of federal student loan debt, you would receive up to $10,000 in debt relief. And this is the relief that had been denied by the Supreme Court on June 30th. So what exactly happened on June 30th? So this was only a few weeks ago. So right after the Biden-Harris administration passed and worked to have offer the federal student loan debt relief, there were 6 Republican-led states that then sued the Biden administration to stop that debt relief from happening. They claimed, and this is all in the court documents and everything, but I'm just summarizing here. They claimed that Biden's debt relief plan would cause harm, such as lowering tax revenue or diminishing the value of investments tied to student loans. And it went all the way up to the Supreme Court, and the Supreme Court released their ruling on June 30th. And essentially what they said was that MOHELA, which a lot of you will most likely have your student loans with MOHELA as your student loan service provider. I do. I have my student loans through MOHELA, so I'm very familiar with them. But the argument that was put forward to the Supreme Court was that MOHELA would lose money and make it more difficult to make payments to a Missouri state fund that helps its public colleges and universities. So that was the argument, was that MOHELA would be harmed by the federal student loan debt relief that Biden was trying to apply. The other thing with the ruling was that the Supreme Court basically said that Biden couldn't use the HEROES Act, which was an act passed during 9/11 in 2001, which was supposed to be for temporary relief. They couldn't justify it on mass scale as Biden was trying to do in this case. And so this is what happened, and this is why the Supreme Court ruled against passing and allowing Biden to administer the federal student loan debt relief. So hopefully that kind of helps clarify what was the Supreme Court ruling and what is that. So really what you want to know and what everybody wants to know is what does that mean? What are next steps at this point? So it was really clear that the Biden administration was kind of ready. They were expecting for the Supreme Court to rule against them, given that it's a majority conservative justices at this point. And on that same day, what they did was they're working on further relief. This is all to be subject. There is no kind of definitive, this is what's going to happen, but they're basically looking at providing further relief under a different act called the Higher Education Act. So we don't know and we can't say what changes, if any, will come about through that act, but that is something that they're working on an ongoing basis. The other thing that came out with on June 30th that's more concrete is that in addition, they also offered $39 billion relief for 804,000 borrowers for various administrative fixes to the income-driven repayment plans. And I'll talk a little bit more about that in an upcoming slide. And then on September 1st, they announced that there's going to be an on-ramp. So essentially, on September 1st, what's going to happen is interest is going to start to accrue on your federal student loans. That is for everyone. Everyone is going to start having interest accrue on their student loans again. However, there's going to be this temporary on-ramp for 1 year to because that's only basically a 3-month notice for people who have had their student loans on pause for 3 years. A lot of people are going to get caught out by this. It's during the summer. People have lives. We understand that. So there will be a temporary period where if you don't make payments, it's okay. And you're not going to default. So again, I have another slide where I'll explain that in more detail as well. And then the other thing to keep in mind is that your payments are actually going to resume on October 1st. So you are being expected to start making your payments again from October 1st. And additionally, there is going to be a new payment plan available called the Save Payment Plan. So I'm going to go into more detail about that. But first, what you should do now is 4 really pretty easy, straightforward steps. The first thing is you need to get ready. So what you need to do is you need to log into studentaid.gov and make sure your information is up to date. So you can update that with your non-US address, so the address that you physically live at, and your contact information as well. The second thing, I'm going to go into these in more detail as well, so just bear with me, but I'm just going to summarize them for now. The second thing you should do is know who your student loan servicer is. And I'll explain more about how to find out who that is if you don't know who it is. The third thing is you need to review your repayment plan options. So you want to double check to see if you're on the best repayment plan for your circumstances. And finally, you'll want to review your auto debit enrollment or sign up for auto debit payments as well. So let's go into the first one here. So you're going to log into your studentaid.gov account and make sure that all of your contact information is up to date. If you don't have a studentaid.gov account, you can very easily go to the website and create an account. It's very straightforward. If you don't have an account and you can't figure out how to set up an account, you can actually call the Federal Student Aid Information Center. They have an 800 number. I know it's a pain calling internationally, but that is the number to call in order for you to contact them and figure out how to update your contact information. The second step that you're going to do is, if you don't know who your student loan servicer is, you can find out who it is by logging into your account once you set that up. Additionally, if you don't know who it is, again, you can call the Federal Student Aid Information Center and they will be able to tell you who your federal student loan servicer is. Third, you're going to review your repayment options. So one of the repayment options that is available is brand new, is called SAVE. So it's short for the Saving on a Valuable Education Plan. And this is actually going to be replacing the existing revised pay as you earn or repay plan. Borrowers on the repay plan are going to be automatically moved over to the SAVE plan. So the best way to figure out if you're on repay right now, log into your account and see which plan you're on. You may not have that information on your, let's go back to your student aid account. You might have an account directly with your student loan servicer. So I have both. I have my federal aid.gov login, which gives me basic information on my student loans and how much is outstanding. And then I also have my Mohila login account, which tells me more information in terms of how to make payments, which payment plan I'm eligible for, based on my current income, what my payments would be. So you may have a similar situation, but it really does vary per servicer, which student loan service plan that you have. So you'll have to double check that to make sure. Another thing to note is that if you are on an existing income-driven repayment plan, it's known as IDR for short, you want to check to see if you're on repay. Because again, if you're on repay, you're going to be moved automatically over to SAVE. And again, if you don't know what your plan you're on, you can log into your studentaid.gov account or your student loan service provider account to select the plan that suits your circumstances best. Only you can do that. So I can go through an example here with SAVE. So essentially, the way it's going to work with SAVE is people who are sorry, I have more detailed information here. The SAVE plan, what it does is it calculates your monthly payment amount based on your income and family size. So starting this summer, if you're making, for example, the equivalent of like $32,800 a year or less, which is roughly $15 an hour, your monthly payment is going to be $0 per month. And if you're making more than that, you'll save at least $1,000 a year compared to other IDR plans. So that's the basic information that we have on the SAVE plan. And keep in mind that if you are on a plan and you're not making any payments, I know it's really confusing, but the way it works is that as long as you're set up and you've submitted your income information and you're making qualified payments, even if your qualified payments are zero, you're still doing the right thing in terms of being accountable for your payments, basically. So I hope that makes sense. I know it's confusing because you're like, oh, I'm not paying anything, but as long as you're set up and you're on a plan, and even if your income is so low where you don't qualify to make any payments, you're still technically above board in terms of making your payments because your payments are at zero. So that is how it works. And then finally, we have the RDR plan. So there are a bunch of different IDRs. So I mentioned already about the repay plan. That's going to become the SAVE plan. Keep in mind that future borrowers won't be able to enroll in repay after July 2024 because they're going to phase repay out. There are other plans here. There is the pay-as-you-earn repayment plan, the income-based repayment plan, and the income contingent repayment plan. I'm not going to go into detail about all of them because all of them very much depend on what your income level is and what your circumstances are. So it will depend on if you have a U.S. spouse who also has federal student loan debt. It will depend on if you have children as well. So, but the one thing I found out in researching all of these different options is that if you leave one of the IDR plans and go over to save, you can't switch back to an IDR plan after July 1st. I think that should actually say July 1st, 2024, not 2023. I will double check that and make sure the slides that go out to you all have the correct year. But it used to be that you could switch between IDR plans depending on which one you wanted to, and that will not be the case with SAVE, because the whole point of SAVE is that it is putting people onto the absolute lowest payments possible, so that you can then spend the rest of your income on the things that you need to, like your bills and rent and all of that. So it is really aimed at the people that are most in need for making either zero or very, very low payments. So finally, step 4 is reviewing your auto debit enrollment, or you want to set up auto debit enrollment. So the unfortunate thing is that you can only do auto debit enrollment with a US bank account. And I know not everybody has a US bank account, but if you do, then it is really helpful in order to set up auto debit enrollment so that you don't miss a payment. Unfortunately, no student loan provider will do auto debit enrollment with a non-US bank account. It is just not something that they are set up to accommodate. So auto debit enrollment is set up directly with your student loan provider online, or you can call them in order to set it up with them over the phone as well. So one of the top questions I see from people all the time is, how do Americans abroad make monthly payments? Well, a lot of people do it in a lot of different ways. First one is people will open up a US bank account to then set up their auto debit enrollment. I know how difficult it is for people living overseas to be able to open up a US bank account. It is very, very difficult. A lot of people will use a family member or a friend's address in order to set up an account. Most US side banks will not accept setting up an account unless you have a US address in order to link it to that. But so some people are comfortable doing that and they don't have any problems. Some people are really uncomfortable doing that because they don't have any family or friend connections back in the States, so they're not able to. One option is the State Department Federal Credit Union. If you are a member of the American Citizens Abroad organization, then you can open up a bank account with their credit union with a non-US address. That is one of the only ones that I'm aware of personally. If anybody else here knows of a bank account that will accept people who have a non-US address to open up a bank account, please email me. I would love to hear what the bank is, so that we can help other people do that as well. And then finally, and again, this is not an endorsement. This is just, again, one of the most common ways that people tend to make monthly payments is they open up a wise.com account. Wise.com is a transfer money exchange website service. It is free to set up an account with them. There is no cost. However, there will be a minor transfer fee whenever you transfer money from your non-US account to your to the US to make your payments. One of the things to keep in mind, though, is that you can use it to transfer money as well as to set up auto debit enrollment, because Wise will give you a US bank account details. So that is another way of being able to do it. However, I do want to caution that you should not keep money in your Wise account. So why is that? Wise is not a bank. They are not subject to FDIC insurance in the United States like banks are. So if a bank in the US goes bust, your money is insured up to $250,000. Because Wise is not a bank, they're in a money exchange transfer service. Your money is not going to be protected. So if you use it to transfer, no problem, but don't use it to hold your money. It's not a good place to hold your money. It should be in an interest-bearing account or something like that anyway. But anyway, that's besides the point. Just make sure that you use it for that purpose, but don't let your money sit there. That's not the point of the account. Another frequently asked question is federal relief available for private student loans? So the answer to that is unfortunately no, but you can contact your private student loan lender to look into other options. So for example, more often than not, they will have refinancing options. You can transfer your private student loan to another student loan provider who will offer you a lower interest rate. So there's a lot of different companies that do that. You can also look at any loan payment assistance program options that your private student loan provider provides. Some allow you to defer for a certain period of time with no interest in extreme circumstances, things like that. You can also contact them for forbearance, so where you're in really dire, can't make any payments, and they just put your payments on hold for a particular period of time, and it doesn't count against your credit, or they're not going to hand it over to debt collectors or anything like that. So it's really, really important that you keep in touch with them and make sure that you're up to date on contact with your private student loans as well. So sorry, the kind of federal student loan relief, because it's federal, there are certain kinds of protections that are involved, and that's why it's been such a really big deal for so many people about the new SAVE program and the student loan relief that we were hoping that we would be able to get, and is now, it's been blocked by the Supreme Court, but we do what we can here, obviously. So yeah, that's the best you can do is the best you can do, basically. Another frequently asked question is, am I eligible if I defaulted on my student loans? So yes, the answer is yes. If you have a remaining balance on your defaulted loans, what you want to do is you want to contact the U.S. Department of Education for a new program called Fresh Start. And basically what it does is it helps you eligible borrowers that are in default get back into making payments. So you're not going to be chased down, and it's not going to impact your I know some people still maintain a credit score. I know not everybody does, but for some people that is important. So defaulting on your student loans does impact on your U.S. Credit score and eligibility for any other kind of financial products that are stateside. So if you again, all you need to do is go to studentaid.gov/fresh start and fill in the information, and you can get going on the Fresh Start program. But I would recommend doing it sooner rather than later, because the program only goes until the end of this year. So it's only running until December 31st. So if you haven't applied and you're in this circumstance, please do get that sorted. If you don't know who holds your loans, again, you can call the default resolution group. So there's a link on the screen on how to contact them. And one thing I really wanted to clarify here is that defaulting on your student loans has absolutely nothing to do with exercising your right to vote. Just because you have defaulted on your student loans does not mean that if you start to vote, like the State Department does not contact or speak to the Federal Student Loan or Department of Education. It doesn't work that way. So your right to vote is protected. And you should 100% make sure that you're voting and exercising your right to vote in all races and elections. So another frequently asked question is, are Americans abroad eligible for the public service loan forgiveness? And the answer is yes, but only if you are working for a qualifying employer. So a qualifying employer would be like any kind of government agency, any kind of eligible non-for-profit organization, or government contractor. I have to admit that I've talked to a lot of people who are either teachers or people who are working for nonprofits overseas, and unfortunately, unless unless the nonprofit has gone through all of the paperwork to register for the public service loan forgiveness program, even if you've already put in all this time and then they apply for it and they get it later, that time doesn't count. So if it is something that you want to talk to your employer about, there's some information on the screen where you can apply for it, but it has to be from the employer in order to qualify. When should I do all of this? So I know I've thrown a lot of information at you guys. The answer is now. Don't let these dates sneak up on you. I mean, we're now mid-July. September 1st is only 6 weeks away. The interest is going to start accruing then. Your payments are going to start resume on October 1st. So don't let this sneak up on you. It's better to get it sorted out now when I know a lot of people are on holiday or whatever during the summer. Like get it done so that you can go enjoy your vacation time. Go get it out of the way so that you can move on with your life, right? Some other tips and tricks that I wanted to cover was income proof. This is something that comes up frequently for people. So more often than not, what your student loan servicer will ask for in order to determine your eligibility for either SAVE or any of the income-based repayment plans, it's based on your adjusted gross income from your US tax return, which you file annually, or at least you should be filing annually. And your student loan account will actually now automatically link to the IRS to pull up your latest data and offer your student loan repayment options within your student loan account. It's all connected now, with technology and everything. So it's really kind of cool that you don't even have to think about it. But at the same time, you can just go and put in your information and it'll calculate it that way as well. But if you haven't filed a tax return and you can't link or provide that as proof, you can also provide proof of income through pay slips. And more often than not, you can contact your student loan service provider for whatever forms of income proof that they accept. But the most common ones tend to be your 1040 form when you're filing your annual tax return or your latest pay slip. The great news as well is that you can actually change your payments if your income goes up or down in the middle of a year. So for example, if you get laid off, if you have some kind of or if your income goes up and you want to pay more per month, you don't have to wait for the annual review. You can actually submit updated information and then they will recalculate your payments and they will adjust from there. So one last thing that I'll add here is that if you're filing your US tax return and you're using the foreign earned income exclusion, so that's up to, if you earn up to $120,000 in non-US income, so you live in Germany, you work for a German employer, you're getting paid in euros, and you're earning under the equivalent of 120,000 euros per year, you can use the foreign earned income exclusion on your US tax return to demonstrate that you don't owe any US tax. When you do that, your income will always be a negative adjusted gross income, and your payments, when the student loan servicer will calculate it based on what's on your tax return, will always be $0. This is something that is kind of known in like American abroad circles, but kind of not talked about. But I mean, honestly, I've looked into it. It is basically viewed from the US side, because everybody thinks that when Americans go abroad, they're just going to go abroad for a year or two and then come back. That was an intentional thing where they were like, oh, okay, well, you know, we're going to send people abroad and they'll be on, you know, whatever 2-year period, and let's give them a break on their student loans for that period of time. So thank you, government. You've done something good in general, but yeah, I mean, I can say personally, I did that for many years. I didn't actually make any. I did make payments, but my payments were $0 because I was filing with the foreign earned income exclusion. So that is an option that you can use if you, for whatever reason, when you do the save and it's not $0, or you're still struggling and you can't figure out how to make payments, that is another option, is file your US tax return with the foreign earned income exclusion. It will put you at a negative AGI and your payments will go down to $0. However, the one caveat is that if you have children, it would mean that you would not receive the child tax credit. And if you would get up to $1,500 per child if you're filing the foreign tax credit, and therefore you are eligible for the child tax credit, sorry, the foreign tax credit, and then you get the child tax credit on top of that, you get $1,500 back per child. So you kind of need to weigh up your personal circumstances there to figure out what circumstances work best for you. And I'm very aware that a lot of parents abroad don't know that they are eligible for $1,500 per child if they're filing a US tax return. There you go. There's some more money. Use it for your child. I even know some people that use it to pay off their student loans. So it's totally up to you how you want to spend the money. But those are your options, basically. Okay, so what we're going to do now is hopefully one of the moderators are going to put the link for the Q&A so that you can submit your questions into the link. If one of you could put that in there, that would be great. There we go. Okay, so now you have the link. It's bit.ly/DA student questions. So please click on that link and submit your questions now. I'm just going to go through a really brief public services announcement about Democrats Abroad as an organization, and then we'll get into the Q&A. So it'll give you some time to submit your questions now. So it would be remiss if we didn't talk about the Democrats Abroad Global Youth Caucus. So please be sure to, if anybody here is, I think it's under 35. So if you're under 35, you can join the Democrats Abroad Youth Caucus, where they do all different kinds of great things and activism around youth issues. So be sure to check them out. Additionally, there is the Democrats Abroad Progressive Caucus, or PRO-DA for short. And they just wanted me to share a short message here with all of you that we applaud the ongoing efforts of the Biden-Harris administration to reduce student loan debt, and we believe ending student loan debt must be the ultimate goal for the well-being of our citizens and economy. And with that in mind, we encourage all to join progressive student debt cancellation initiatives and vote for candidates who will fight for that goal. So please join the Progressive Caucus to support initiatives and candidates on the road to success in 2024, 2023, this year and beyond. Yeah, and let's move. There's some links there that will be shared in the chat box, so hopefully you can get some more information on initiatives and activism around resolving the federal student loan and the student loan debt problem in general, because it's a huge issue for people. And then just a little plug from me on the Democrats Abroad Taxation Task Force on our tax advocacy work. Basically, Democrats Abroad advocates for a switch to residency-based taxation, so you only have to pay and file once in the country that you reside. And also eliminating the FATCA reporting of foreign accounts of Americans abroad, exempting Americans abroad, small business owners from the GILTI and transition tax, and many, many more advocacy efforts in order to reform the tax code for Americans abroad. So you can read more on our blog there on democratsabroad.org/taxation. In general, what does Democrats Abroad do for you? Well, I mean, we host webinars like this. We also work with congressional leaders to prioritize Americans abroad issues. We frequently submit statements for the record to congressional hearings, and we also do candidate outreach and education on American abroad issues. And just recently, we went to Washington, D.C. last month to talk to members of Congress and to promote and get them to co-sign on bills that support Americans abroad issues as well. And of course, we also do #1 important work of registering people to vote from abroad. So 4 things you can do to help us help you. Register to vote in US elections at votefromabroad.org, and be sure to join Democrats Abroad. If you're not already signed up, it's totally free. So all you do is go to democratsabroad.org/join, and you can register today for free. Don't forget, you can make a donation for this webinar if you haven't done so already on democratsabroad.org/donate. And if you want to take it to the next level, you can also volunteer for Democrats Abroad. And go to the website for that. So lots of great resources on our website there. There are important elections this year. Coming up on August 8th is the Ohio special election. I'm an Ohio voter. I sent back my ballot, so I know it's been counted now, but if you vote in Ohio, and it's really, really important that you vote no in this special election. Basically, the Republicans in Ohio are trying to pass laws to make abortion access go away. So we need to vote no on the Ohio special election on August 8th. Also later this year, there are a number of governor elections in November, but you will want to register to vote now in order to make sure that you get your ballot and you can send it back in time. And a few other special elections of congressional seats in Rhode Island and Utah. So again, if you haven't registered to vote yet and you live in, or you last lived in one of these states, you can register to vote at votefromabroad.org. Okay, so I'm going to...
Rebecca.
Yeah.
Rebecca, I'm sorry. There's 2 chaps here from the Youth Caucus. They wanted a minute to speak. I don't know if it's possible, but they just contacted me. It's Mohammed Ahmed.
I don't think we'll have... Yeah, I'm sorry. We won't have time.
Okay.
So, sorry. Okay, so let me find the questions here. So, okay, lots of questions, guys. So let me just take it from the top here. So the question is, PAYE versus SAVE for graduate loans. Seems like SAVE is worth it, even if forgiveness is 5 years later than the pay, since the taxable forgiveness will likely be much lower if no interest accumulates on balances for borrowers with $0 monthly payments under SAVE. Again, it really depends on your personal circumstances on which of the different repayment options are going to be best for you. So you can call your student loan servicer. You can also go into your account and you can run the calculations and see which of the payments are going to be most worthwhile for you. Does the info you just provided also apply to parent loans? My understanding is that it does. So again, you would need to get in touch with your parents and coordinate with them from there. Can you sign up for SAVE if you file with the foreign earned income exclusion? Yeah, you can. So, I mean, basically you would be, let's say, for example, you're getting your foreign earned income exclusion. It shows that you have a 0 or negative adjusted gross income, and then you save up, you sign up for SAVE, and that would put you as 0 as well. So it'd just be 0, 0. You'd be 0 on both sides, basically. But again, it depends on what it says on your adjusted gross income on your tax return as well. Can you explain again what income is excluded under the foreign earned income exclusion clause? Is it all income earned outside of the US? Yes, that's correct. So if you are on an income under $120,000 a year, and even if you are earning over $120,000, you can still qualify to exclude $120,000, the equivalent of $120,000 and under of foreign income. So again, I'll give the example. You live, let's say you live in Brazil, you're earning under the equivalent of $120,000 a year. You can file with the foreign earned income exclusion to because you earning your income in Brazil, and it's not US earned income. So that's how you qualify for the foreign earned income exclusion. I am a US citizen living abroad. My spouse does not have status in the US. When I apply for income-driven payment, they include my spouse's income in this. Do you know if there's any way to avoid that? Yeah, you can apply with your with just your income. You can give just your income. So I have a non-US spouse. That's how I always do it. I've never applied with my spouse's income. So you can totally do that with just your income. Does the income of foreign spouses count towards your annual income for US taxation and loan purposes if they are not US citizen and have never lived or worked abroad? Sorry, I have a follow-up question, which is, do you want it to count or not? Because the previous person did not want it to count, so I've already answered in that circumstance. If you do want it to count, it means that you need to file a US tax return with your foreign spouse, which, to be honest, unless you are planning on living in the United States or returning to the United States, generally is not something that people recommend or advise. But hopefully that helps clarify. You mentioned that you can't switch back to an IDR plan from SAVE after June 2024. Why might this be an issue, as it should be the most affordable plan? Oh, that's a really good question. It said, I'm so sorry, I can't remember off the top of my head, but it said in the article that I cited on that slide why it might make it difficult for people. Some people are better off in the IDR plan. I think that was the main thing that I can remember off the top of my head. But again, it totally comes down to personal circumstances as well. Has there been any progress on the bill that makes it easier to file for bankruptcy on student loans? I was actually looking into this. So the answer is I don't know. I'm so sorry. But I know that it is something that exists, and basically my recommendation is that if you want that bill to pass, you should contact your members of Congress and ask them to co-sign on the bill, because they need more co-signers in order to pass bills through Congress. So that's one of the best ways of making sure that legislation will pass. Okay, I am preparing for retirement, by which point I will still have unpaid student debt. Will the government garner my Social Security income? My understanding is that they don't cross student loan debt with Social Security income, but don't quote me on that. Yeah, I mean, if you need to keep in mind that with one of the things that I didn't go over in the main presentation is that most student loans will be written off after 20 or 25 years, depending on if they are undergraduate, depending on if they've been consolidated between undergraduate and graduate, and if they're graduate loans. So if you have a loan and it's been more than 20 or 25 years, potentially it's already been written off. And the other thing I should mention here is that if your student loan is written off between now and 2025, I don't remember the exact date in 2025 off the top of my head, but historically the way it works is if you had made your payments and you paid as much as you could, but you still had a balance after the end of your student loan period. So whether that's 10 years, if it was just like a standard undergraduate loan, or if it was a consolidated loan or graduate loan, and it gets written off after 20 or 25 years, the balance of that you would then owe US tax on, income tax. They would treat it as income. So you would have to, which obviously is very difficult for lots of people. During COVID, Biden changed it so that would not be treated as income, and that you would not have to pay US income tax on it. And that has been extended to 2025. So I don't know in the future if they're going to extend that or what. It really kind of depends on Congress and who's president. Okay, the SAVE plan says that it eliminates 100% of remaining interest for both subsidized and unsubsidized loans after scheduled payment is made under the SAVE plan. Can you explain what this means? So as long as you're making payments over the 20 or 25 year period, and then it would be written off as I just explained. So even if you're paying zero, as long as you have filed your tax return, submitted it, and enrolled in SAVE or any of the other income-based repayment plans, you are technically in payment. And that period of time where even if you're paying zero, as long as you are in payment, that it contributes towards the completion of your payment period, basically. So sorry, I know this is confusing. I'm hopefully clarifying it. What's our time? We have a few more minutes. I will try to get through a few more here. I read somewhere that the new regulations will mean that if you are making monthly payments, your loans will not continue to accrue interest. Is this in effect, or was it part of what the Supreme Court struck down? This is not part of what the Supreme Court struck down. There are new changes to the way that the interest is going to be calculated. However, it depends on the loan itself. So I would really recommend that you double check with your student loan servicer for your loan and what you have and what and how the interest is going to be calculated on an ongoing basis. If your payment is zero, are you accruing interest, and is that interest capitalized? That kind of goes into what I just said. So if you're paying zero, you are going to be accruing interest, and it will depend on what the loan is and what payment plan you are on whether or not the interest is going to be capitalized. I would recommend that you contact your student loan servicer to find out how your interest is going to be calculated going forward. I think I'm just trying to see if there are any other, because a lot of these are repeat questions. Can you talk about if we don't qualify for public service loan forgiveness abroad, what happens when the time of the loan is up in 25 years, for example, and we are still living abroad? So I think I already kind of answered this one, but the balance is written off, and previous to 2020, the way it worked was you would then have to report the balance as income, and then you would be liable for paying US tax, income tax on the balance. However, if your student loan is written off up to 2025, that is no longer the case. It will be up to Congress whether or not they decide to extend that relief beyond 2025. Okay. I think I'm gonna, unfortunately, we'll have to leave it there because we've now run out of time, but I will just make one last plug here again. If you felt like this was valuable, and if you're able, I know not everybody is able, but think about doubling your donation perhaps. All this is really important. We're completely volunteer-led organization. I'm a volunteer. I'm not getting paid to do this, but hopefully some of you might be able to dig in and donate another $5 or $10. So would really appreciate your help and support on that. So yeah, I just want to say a big thank you. Thank you for attending the webinar. There's my email. If you'd like to email me a follow-up question, feel free. You can also contact us. We'll do our best to get the recording out to you as soon as possible. But yeah, thank you again, everybody, for attending, and thanks very much. And have a good day, afternoon, evening. I forget who it was in Tokyo who woke up for this, but hopefully you can go back to sleep. So thank you again, everyone.